everyone, I'm Fasila Erni, your host for today. Welcome back to channel 211 Accounting and Reporting TV. Today, we have a few guests with us today to discuss about the annual report from Bank Islam and Tenaga Nasional Berhad. Both are listed on Bursa Malaysia and Sharia compliance. Without further ado, let me invite our first speaker for today. Miss Natasha, what is the nature of business and which accounting standard is applied in the preparation of the financial statement for Bank Islam and Tenaga Nasional Berhad?
Bank Islam Malaysia. In terms of accounting standards, the bank follows amendments to MFRS 108 and MFRS 112, emphasizing clarity on accounting estimates and deferred tax related to assets and liability. Next, we move on to the second business, which is Tenaga Nasional Berhad. TNB adheres to accounting standards, implementing amendments to MFRS 3, MFRS 9, MFRS 16, MFRS 116, and MFRS 137 for the financial year beginning on January 1, 2022. Looking ahead, they are gearing up for MFRS 17 and other amendments in 2023 and 2024.
There's a very good input from Miss Natasha about the nature of business and the accounting standard that is applied in the preparation of financial statement for both companies. Now, let's move on to the next speaker. Mr. Ifan, what is the significance of Bank Islam Malaysia Berhad's commitment to adopting the accounting standards, particularly the recent amendment to MFRS 108?
Thank you, sister, for the question. Bank Islam's commitment underscores its dedication to transparency and precision in financial reporting. The recent amendments to MFRS 108 showcase a refined approach to monetary amounts in financial statements. With measurements uncertainty, this refinement is crucial for providing stakeholders with a clearer understanding of the basis of estimates, distinguishing changes in inputs or measurement techniques for accounting estimates from errors arising due to prior periods.
Okay, next, how does the Tenaga Nasional Berhad's proactive approach to adopting the accounting standards reflect its commitment to financial reporting standards?
Okay, for Tenaga Nasional Berhad's proactive approach underscores its commitment to maintaining high standards of financial reporting, ensuring accuracy, transparency, and compliance with amendments to the Malaysian Financial Reporting Standards (MFRS).
Thank you so much for the brilliant answer. Now, we move on to the next speaker. Miss Isma, today we are analyzing the financial strategies of two prominent companies, Bank Islam Berhad and Tenaga Nasional Berhad. Can you explain into the similarities and variation of their accounting methodologies and treatment of transaction under the specific accounting standards?
Thank you, Ms. Fasalia. So let's explore the intricacies of their accounting practices under the approved standard. Our analysis will be focusing on MFRS 13, 136, 112, and 107, uncovering how these companies actually navigate their nuances in accounting treatment, striving for financial transparency and accuracy. Starting with fair value measurement under MFRS 15, we find that while both companies adopt a hierarchical approach, they diverge in how they value their asset and liability. Moving on to the impairment of asset as per MFRS 136, Bank Islam and Tenaga Nasional show alignment in how they assess their financial asset expected credit losses, but distinctly differ in their treatment of non-financial assets. Shifting our focus to income taxes, we discover striking parallel in the accounting approach, yet subtle variation emerge in the recognition of tax-related items, signaling diverse strategies. Finally, in our analysis of the statement of cash flow, we unraveled a shared structure, yet observed notable differences in specific financial adjustment and working capital changes. So join us as we navigate through the intricacies of these financial methodologies, uncovering the thread that weaves through their financial narrative, reflecting not only adherence to standard, but the unique operational strategies defining these corporate giants. That's all from me. Thank you.
Thank you, Ms. Isma, to answer about the similarities and variation of their accounting methodologies. Oh, Ms. Alia, can you please explain the performance of these two companies based on their statement of profit and loss and statement of cash flow for the current year 2021 and the previous year 2022.
Let's start with profitability. A key measure here is the net profit margin, which show how much of each ringgit earned translate into net profit. In Bank 2022, Bank Islam saw a significant jump in its net profit margin from 4.97% to a whopping 81.84%. This is compared to TNB more modest increase from 5.34% to 4.28%. This tells us that Bank Islam is much more efficient at converting revenue into profit compared to TNB. Moving on to the liquidity, we'll look at the current ratio, which indicates a company ability to meet its short-term obligation with its current asset. In 2022, both companies show improvement in their current ratio. Bank Islam went from a negative 2.81 to 1.08, while TNB improved from negative 0.96 to 1.09, while both are now technically above the liquidity benchmark of 1. It's important to note that their liquidity remains relatively weak compared to the industry average. Now let's assess solvency, which looks at the company ability to meet its long-term financial obligation. Here we'll use the debt to equity ratio, which measure how much debt a company finances with its shareholder equity. In 2022, Bank Islam maintained a lower debt to equity ratio of 0.71 compared to the TNB's 0.89. This indicates that Bank Islam is less reliant on the debt than the TNB, giving it a stronger solvency position. Next, we'll examine efficiency, focusing on the operating profit margin, which show how much profit of a company generate from its cooperation. In 2022, Bank Islam again came out on the top with an operating profit margin of 23.66% compared to the MB 3.6%. This suggests that Bank Islam is significantly more efficient at managing its operational costs and generating profit from its core business activity.
Thank you so much for clearly explains about the performance of these two companies. We have now reached the end of the program. Thank you everyone for taking the time to watch our news today. I'm Fasila Ernie, signing off as your host for today. Thank you very much.